The greatest mistake you can make in life is to be continually fearing that you will make one. Elbert Hubbard. Don't be afraid of making mistakes. Embrace them. Learn from them. The dumb mistakes are the ones you repeat over and over because you didn't learn anything. When you make a mistake, it's telling you you didn't do something right, so do better next time. It's fine to make mistakes here. You are learning how to chart stocks, and you're learning to do it with virtual trading. We're not a stock calling service, we're an education firm. We are here for you. You is what we are all about. And of course, trends is what we are always looking for. First and foremost, the weekly vertical crossover happens when the price percent oscillator crosses over the red signal line, either up or down. We also have 2-day recrosses. That is where the 2-day crosses in opposition to the weekly and then crosses back over again. And the least successful are the 4-day recrosses. So, I'm sorry, 4-day, 4-hour recrosses. So again, weekly's the biggest, 2-day recrosses back in the direction of the weekly, second best. And the third best are the 4-hour crosses. And again, people get greedy, and greed will kill you in the stock market. It is patience, my friends. There's plenty of time to trade, and if you do it right, we say over and over again, first rule of trading, don't lose money, virtual money in this case. Second rule of trading, make money. But if you lose money again and again and again, you won't have anything to make money with. Let's jump into these charts. Everything up for the day but bonds, the opposite of yesterday. Are you surprised? You shouldn't be. Things are crazy. Lots of volatility, huge market crash. And what are we seeing set up this week on the S&P 500? We have a red open box candle. Now, it's not a red down candle. It's a slowdown in the up movement. But we can see that the high so far this week, 286.79. The prior high, 287.30. So we've not topped that from the prior week. Price percent oscillator still heading up, weaker than it had been. Derivative oscillator losing downward momentum. We go to the 2-day chart. What do we see there? We see where the 2-day trend line has, of course, been violated going into the first day of the latest 2-day candle. Prior, it was a red doji, which means lots of indecision tending down. Now we have a green doji pretty much that's forming. We'll see what that ends up turning out to be at the close of the candle. Derivative oscillator peaked back on the 17th and has been going down for the last 2 days. We go from the 2-day to the 4-hour. We see that the 4-hour is still heading down, even though it was an up day in the morning and the afternoon, up 2.22%. 4 hours still down. So what we're really paying attention to right now is in particular this 2-day. Which way is the 2-day going to go? Is it going to keep going up and eventually pull the weekly chart back over into an up direction? Or is it going to fail, rotate over, hammer down, and the bull trap has been sprung and it loses everything? Don't know. We'll see. We'll watch. We'll let the charts lead us. We have a lot of anxiety in the market, a lot of folks, I wouldn't say despairing. I think they're just confused. And that is exactly what we expect. In denial is probably the best word. In fact, if you've taken our Corona investing training, that's what we talk about. We're in the denial phase. People can't really believe, even though it's been weeks now, just what is going on, and they have no clue what is coming at them. And it is a freight train of despair. But we're going to let the charts lead us. We're not going to despair when it comes to those poor souls that are just sitting there with lots of assets in the marketplace. Again, not a stock calling service. We're an education firm. We're going to practice trade to show ourselves approved. What do we see going on the Qs? Again, not reached a higher high on the weekly this week prior to the prior week. That price percent oscillator is getting closer to crossing over, going up. So again, that happens. We'll be happy to follow it in whichever direction it leads us. We see the derivative oscillator still negative, but it's losing downward momentum. We go to the weekly chart. What do we see? I'm sorry, from the weekly to the 2-day, what do we see there? We see that same sideways slippage, not as much, We have a green open box candle. It has a little wick on the bottom, larger wick on top. Derivative oscillator again peaked back on the 17th and is losing momentum. So, but that price percent oscillator, all important, heading up. Go to the 4-hour chart. It's still negative, even after the up movement in the morning, more in the afternoon. Prices below that 2-day trend line, derivative oscillator flat. It actually gained momentum in the morning and then flat in the afternoon. So again, we'll continue to see which way these charts lead us. We're, again, looking to see if we're going to have a weekly vertical crossover. Don't know that that can happen it could happen by the end of the week if there's a lot of strong up movement. But we could also have that 2-day chart rotate over going down. So we'll pay attention, see what happens. That's what's so fun. We'll let our charts lead us. Now let's go to 20-year bonds down 1.02%. How are they looking for the week, though? Well, we have a green up candle reaching a higher high than the prior week. Price percent oscillator is about flat. Derivative oscillator still positive, but losing momentum. Go to the 2-day chart. What do we see there? Well, look at that. It's trying to bounce off. We shall see if indeed there is a bounce off that occurs. We're going to have this candle finish drawing. Remember, the prior candle represented Monday and Tuesday. Current candle is just Wednesday so far. We have to wait for it to be fully drawn before we can make a call. But right now, unless it's a big up day for bonds tomorrow, might have a bounce off on the 2-day heading down, which again would be no sign for strong continued up movement in bonds. Even though that weekly is still technically heading up, we go to the 4-hour. We can see where we peaked recently on Tuesday morning, then pulling back some Tuesday afternoon down Wednesday morning and afternoon. So we'll continue to watch, see what bonds give us, if anything. And again, patience, my friends. These stock charts work. We just have to pay attention and follow them. You can't force the market. Lastly, we go to gold, up 1.97% for the day. We had that weekly vertical crossover course back on the week ending the 9th of April. Nice big up week last week. This week, not so much, not reaching a higher high. A cautionary red open box candle. Derivative oscillator still losing downward momentum. Price percent oscillator heading up. So we'll continue to pay close attention to that. We go from the weekly to the 2-day. What do we see there? Well, we see so far a candle sort of bouncing, moving up after 2 days of downtrending motion. We see that 2-day price percent oscillator starting to move up and a green open box candle forming, not reaching a higher high that we saw back on the 15th, but again, growing quite nice. And we go from the 2-day to the 4-hour. What do we see there? Still not enough momentum to cross over going up. Maybe that will happen. That could give us an opportunity to jump into an up trade. But again, that is going to be our weakest signal for doing that. So we'll watch, see what there is to see. Perhaps we'll have an opportunity to get into gold before the end of the week. For those of you who are just interested in our main 4 charts, we are done for the day. Thank you so much. You hadn't purchased our book. We have a copy available for you, autographed, ready to go out. If you live overseas, email us, cw@chartingwealth.com. We'll email you a PayPal invoice and get it to you. If you happen to live in the States, what I need you to do is to simply follow the link in the show notes for the book, and you will see it in there. You can purchase it. We'll get it right out to you. Now, those of you who are interested in the rest of it, let's jump into the other charts. We have oil, we have Bitcoin, and we have real estate. Let's jump first into oil. What do we see oil doing for the week? We look at our weekly chart and we see that oil is down for the week. It was up a little bit for the day, 0.45%. Could you have had a worse day than yesterday? Down around 50% at one point. So again, oil still very, very much down. Price percent oscillator heading down quite strongly. We go to the 2-day chart. What do we see there? We see the price percent oscillator pulling away from the red signal line, not reaching a lower low than we did yesterday at this point. We go to the 4-hour chart. What do we see there? Some up movement in the morning, or slowdown in the down movement, and then and a little less in the afternoon. Again, overall for the day, up 0.45%. So we go from oil, which again, hammering down still, even though it pulled up a little bit for the day, to Bitcoin. That was up for the day 3.75%. What do we really see happening? Just sort of a sideways slide. Still hadn't topped out where it did back on the week of the 9th after going down, what, 50%? It is around 30% down at this point. We can just see a sideways slide going on, still actually edging down on that price percent oscillator. We go to the 2-day chart. First day of the latest 2-day candle is trying to head up. It did cross over going up on the 2-day chart back on the 15th, but again, hasn't reached anywhere where it topped out back on Thursday the 9th. So again, Bitcoin trying to find a bottom. We go to the 4-hour chart. What do we see there? See down movement in the morning and then a bit of a recovery in the afternoon. Like we said, ended up 3.75% down, up for the day, 3.75% up for the day. So Bitcoin going nowhere fast. Lastly, real estate recovered a little bit, 1.53%. What do we see so far for the week? We see an equivalent of pretty much a red doji, which a lot of indecision, tending down so far 3 days into this 5-day weekly candle. Price percent oscillators ticking down a little bit. Derivative oscillators still negative. Go to the 2-day chart. What do we see there? Again, down for the day, not down as far as it was the prior day. Well, when I say down, that's what the candle's showing us. Again, not plumbing the depths that it had before. This is our average paced Heikin Ashi candlestick. Price percent oscillator heading up a little bit. But again, we're nowhere near reaching the highs from back on Thursday the 9th. The derivative oscillator continuing to lose upward momentum. We go to that 4-hour chart, and we see some up movement in the morning, about the same in the afternoon. So overall, where are we? We're just in a malaise right now. The market on the weekly chart for real estate just sort of tracking along. Price percent oscillator still moving down slightly. Still moving down in Bitcoin, and still moving down quite strongly in oil. So we'll see how the week continues to move forward for us. We're going to pay close attention to those 2-day charts on the S&P 500 and the NASDAQ 100. Look at that 4-hour chart on gold, and then see which way bonds are going to sort out. That's where we are, folks, as we end the day. Thank you so much for being with us. God bless. All the best from the whole team at Charting Wealth World Headquarters.